So why are gas prices so high, or fossil fuels in general? Well, it's just a matter of supply and demand. So let's draw a supply and demand curve here. And oil is a world market. So here we're talking world supply and world demand. And here's the equilibrium price. Here's the equilibrium quantity. Okay, so there's where we were before the pandemic. So what happens when the pandemic hits? We shut down. We're frozen practically. We don't go anywhere. Nobody's driving anywhere, hardly. So we had a massive decrease in demand for, let's just say, fossil fuels in general, or oil primarily. And we had the price drop. Okay, that's a leftward shift in demand and a reduction in quantity supplied as we move from this point to this point. Okay, so I mean, well, that part's good. We were pretty happy about that. But over time, as the situation looked bleak, here we have these low oil prices. That's not exactly helpful to the oil production. I mean, oil, notice the quantity falls from here down to here. We had some oil companies go out of business. There were some oil wells capped and workers leaving the oil industry. So this actually makes the supply curve a little less elastic, a little steeper, if you will. So we've got a shift in the supply curve. And we have oil prices starting to rise because even less production of oil, but also getting a little less elastic. So it's steeper than it was before. And this is significant in that it's going to make, when the economy opens back up and demand starts to shift to the right again, oil is less able to respond to that shift. So what happened towards the end of 2020? A vaccine, okay, the economy started to open up a little bit, and what happens? We start to drive around a little more, and demand starts to shift back to the right. And oil prices start to go back up. But supply doesn't respond as quickly and as easily. And as the economy keeps on expanding, oil prices just keep on going up. Okay? Now, so we started back down here, up, 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 up. Okay? Now, to put a little politics in here, in the last 3 months of the Trump administration, the price of oil went up by 32%. Okay? In the first 3 months of the Biden administration, it went up by 19%, and then in the next 3 months, went up another 17%. So, that's all because supply was less responsive, and as the economy opened up, demand was shifting out to the right, but supply wasn't able to respond. And so we had those price increases, as we see modeled here, okay, from here to here to here. So, not really President Trump's fault, not really President Biden's fault, okay, just to put a little politics in there. Let me draw another, a new and improved supply and demand curve. Okay, so here we are with higher than we want oil prices. Okay. Now, something else happens that makes them even higher, and that is Russia invades Ukraine. Okay, that upsets some supply, but mostly it's the world response to that. For example, in the United States, President Biden stopped Russian oil imports in protest of their invasion of Ukraine. And so that shifts the supply curve to the left and bumps up oil prices even further. So if you want to blame President Biden, that would be his fault. However, I think most of the world and most Americans agree that we cannot support a country like Russia economically by buying their exports because of what they're doing. But that is the economics of it. The supply curve shifts to the left, and we have an increase there. Now, putting a little more politics on this, President Biden has left himself a vulnerable political target because of some of the things he has said. And for example, he campaigned that oil prices would have to rise to facilitate the movement from fossil fuels to green energy. And you know, they are substitute goods, right? So if the price of fossil fuels goes up, that makes green energy, a substitute for fossil fuels, relatively cheaper, or cheaper relative to the substitute good of fossil fuels. He also canceled the Keystone Pipeline on his first day in office, executive order. And some oil leases and permits, but those have been brought back. So here's the thing about those. It makes him an easy political target, but probably none of those had a major impact, at least on the current oil price. The Keystone Pipeline will certainly have an impact, or I should say the lack of a Keystone Pipeline will certainly have an impact on future oil prices. And so, you know, but that's down the road. We're talking about current oil prices. Now, and the leases, well, in all fairness, yes, there are lots of leases, but it's a little bit like telling farmers they can grow all the wheat they want in Antarctica. The leases have to be, and the permits have to be in places where there's actually oil, okay? And some of the places where there is oil, they can't drill. So, again, as far as today, probably not a big impact. However, the overall environment, the overall, I should say, atmosphere of, I can't find the word I want, may have contributed to the dismal outlook that caused some oil wells to be capped and not worked. Okay, so I mean, you've got a president who has said that he wants to put fossil fuels out of business. You know, you're not going to be all that excited to invest heavily in new production because your chances are you may not get a return on that investment. So that political climate, I guess is what I'm trying to say, has not been a real positive one for oil companies to respond. Even if they could, again, they've capped some wells and some oil companies went out of business and oil workers have left, and you can't get them right back immediately. So, but on balance, as far as oil prices today, probably not really President Trump's fault or President Biden's fault. So President Biden, taking a lot of hits, probably unfairly to some extent at least, actually to probably the largest extent. So he gets a pass on oil prices. However, when it comes to the overall inflation rate, as measured by the consumer price index, the inflation rate, which is calculated by the percent change in the the consumer price index from month to month or year to year, he does not get a pass there. And we'll talk about the reason why when we get to aggregate supply and aggregate demand.